All right. Hello, everyone. Welcome, welcome, welcome. Appreciate you tuning in to today's Lifetime Trading System event that I'm calling Trading the 2025 Correction. So, we shall give everyone a few minutes to get on board. It usually takes 3, 4, 5 minutes. But as always, if you wouldn't mind, just chiming in the chat box, letting me know that you can hear me and that you are currently seeing a screen that says Lifetime Trading System. Just want to make sure everything is working. All right, thank you. Want to get a few, and everyone else, please don't be shy. You know, chime in. You know, it's bit of relaxed. I am not sitting here with a suit and tie in an office outside of the Nasdaq. So pretty relaxed, and want everybody to feel comfortable asking questions and making comments. And like I said, we'll get going here in a minute or two. Typically, a final notice goes out, so just want to make sure everybody gets a chance to get on board. Until then, everybody enjoying our wonderful little market correction. I think the S&P is in correction now. Let me double check. I know the Nasdaq is. Russell is knocking on the door of a bear market. Yep, S&P getting close, getting close. How's everybody doing out there? Enjoying it? Not enjoying it? Enjoying it? All right, good. How about everybody else? How's everybody else doing in this delightful sell-off? And if you're struggling, feel free to say you're struggling. Everybody has different trading styles too, obviously. So for me, um, one thing's for certain, tend to do better when you have a more volatile market. So for me, right? And most of the traders that I know prefer a heightened volatility. Got to get moving, get some bigger gains. But I understand some people are not as much of a fan. But I'm gonna throw this guy up here real quick. Always want to make sure we get that standard disclaimer out there. My assumption has always been if somebody is on one of these webinars, they do know losses can occur. Does anybody not know losses can and will occur? As good as we do, we take some losses sometimes. Now, when we talk about the lifetime trading system, you will hear me use the LTS. That's what I mean. LTS is unique in that it encompasses hopefully everything somebody could want. So the education is there, the coaching is there by yours truly. No sub coaches or hourly coaches. Definitely no coaches from Thailand. It is me. Um, Trade ideas are provided, and maybe the best part, it actually has a trade service with it. That service, called Velocity Trader, is performing very well. Can you guys even read that? It's really small print. We had a very nice week last week. Um, Now the service only does like $500 a trade, so they're not like huge positions or anything like that. Last week we were probably a little more active than usual. We had 4 trades last week. Usually try to keep it to around 2, but we've done all right. We went 4-0 last week. I think we were 2-1 the week before, 2-1. So not too bad. We've netted a little bit north of 3 grand in profits. And again, not we're not putting thousands out there to get that. So, and yes, we are kind of just moving along here. I assume that are going to be here are here. So just kind of talking and clicking at the same time. Anybody that has not met me before, has not been to a webinar, is not already a member. A couple of names I recognize that are already members. This head of the other. Um, I am a CMT, Chartered Market Technician. So no, I'm not some high school kid gaming in his basement. Right? You can look me up on the CMT Association website. Back when I became a CMT, there was only about 2,000 or 1,000 of us, I think. Now there's like I think 4,000 of us. Coaching, I kind of consider that to be at the core, probably what I do most of. Yeah, I operate the trade services too, but my time is spent teaching and coaching. We spent a lot of time this morning on our call. So over that time, in a one-on-one setting, because LTS, there is an optional and an option if somebody wanted to still do one-on-ones. But I provide a lot of the group, so I don't know that it's needed or not. It's up to you. But coached more than 5,000 students in a one-on-one environment, and tens of thousands of students in environments like this or group calls, right? So this is what I kind of like to do. I really like to help individuals profit. It's great that again, LTS has its own trade service called Velocity Trader VT. As I kind of has its own trade service, and it's great to get the trades. It's great to make money. My members are very happy the past 2 weeks in particular. But I always think it's better if I can teach you to also fish, right? Because obviously that you're going to do better with the trade service, and you can make even more money on your own. Create a lot of content. I've been creating content now for about 15 years, so it's everywhere out there. And yeah, that's me. I don't spend too much time on it. Not really. If you have questions about me, feel free to ask. I'd like to ask some questions about some of you. How long's everybody been trading? We got some new traders here. Everybody a veteran? Anybody been trading more than 2 decades? What do you like to trade? Nowadays, it seems like it's either crypto or options. What's everybody like to do? Wow, 25 years. All right, good deal. So you've been trading longer than I have. I think I'm on year. Oh, wait a minute. That's not true. Yeah, it is. Yeah, it is. I'm on year 23, 22, 23. So nice. So you were trading back there in the .com era. I started right after we came out of that. So Mary's new to trading. All right. What brought you? What made you decide to get into trading, Mary? Oh wow, trading energy futures. All right, good deal. David knows his way around a thing or two. Tom, were you trading in '99? Is that how far you go back? You go back. You were right in the thick of it, right smack dab in the middle. So I got some experience. But yeah, Mary, what? I'd be curious to know what made you get into trading. Looking for a good time. Want to make a few bucks. Another income stream. Got it. All right. Good deal. I did some. Oh wow. So we have 2 Marys here. The other Mary is back in '99. He got out and back now. Okay. Gotcha. Gotcha. Perfect time to come back. And again, I only say that because I mean I really like volatility. I think that's where some real opportunities are. At least if you're trading options and things of that nature. When you have that leverage, but you can get bigger moves. It kind of again, for me at least, it really helps. But instead of that last question, one question I wanted to kind of ask instead was, um, when you think of tuning into today and taking your time, which I'm sure you have any number of things you could be doing, what were you hoping to hear? Obviously, we're going to switch to a trading screen here soon. We're going to talk about some stuff and some things, but I'd love to hear what would you like to hear? What would you like to see? What would you like to talk about? What would you like? What do you want to make sure that if I can, that I can cover it today? Because if possible, I'd love to give everyone here, at least a little of what they were looking for. I want to make sure. Sometimes I talk a little bit about my own trading approach. A lot of times I talk about the bigger market and the forecast kind of for the year, what we're seeing right now. Probably opportune time to do that, right? We're kind of getting knocked around a little bit. What more should we expect? Where is this going? What do we see? One thing I know for sure I'd like to show everyone is, um, across all the services I operate and all the coaching calls I do, this was a correction that was, I'm going to say, easily forecast. Um, we had started talking about it close to 3 weeks ago. And I want to show that to you. A nice little tool I like to use. I don't call corrections or bear markets very often or anything, rarely, as a matter of fact. And when we do, we tend to get it right. I want to show you how we've been able to get that right. We were able to get 2022. We were able to get that one right. The correction in 2018, I think there were two of them actually in the beginning and the end. 2007, best way to make money in the market with small account. Well, definitely on the right track with options, Mary. I'll tell you that. Um, we're big fans of being on both sides of the trade because that's another thing the volatility can do for us, right? So we don't have to be just calls. We don't do, and I am much more of a long call, long put person. I don't really get too much into just not my thing. Now I teach credit spreads and diagonals and iron condors and selling naked puts and cover calls and whatever you want. For me personally, I really like just sticking with long calls, long puts, and or both. And in this environment, definitely like both. Are you familiar with strangles, Mary? And nobody else, I guess, wants to. Maybe nobody else had anything in mind today. So cool beans. Means I can talk about whatever I want. All right, one final set of questions. For those of you that would like some help, for those of you that, hey, if I could have somebody kind of help me with this, what would it be? Hey, I'm kind of new, would love to get some more education from not some hack on X, but actually somebody that knows what he's talking about, been doing it for a while. Or think I know what I'm doing, but I can't find good setups. I just want to trade alerts. Kind of busy. Yeah, sure. I'd love to learn to fish, but I wouldn't mind some fish dinners or somebody just to help you through your trading or all the above. If you could have somebody by your side, a little caddy on the golf course, what would you want there? David trade a lot of long put and call spreads. Oh yeah, I love long puts, long calls, both. Yeah. Biggest problem is correctly anticipate direction, what to look and try to justify. Oh yeah, okay, cool. Yeah, that's my bread and butter there, Mario. Again, I'm a CMT technical analyst. I do like to keep it simple. All right. So, take your VWAPs, take your Elliott wave. I worked it out with Elliott wave with the instructor there for like 2 years. It's just not my thing. Take your Fibonacci, your bands, moving averages. It's just really not, something that I used to look at all that stuff too, and I just don't. Um, I learned, for me, I learned very well, but there's a reason why the saying "price is king" exists. And more, I think, even better, price is the only thing that pays. That really stuck out to me. And so now that doesn't mean I can just forget everything I know as a CMT, right? I can't forget everything I know. I can't help it if know that there's this, that, or the other. But every trade I ever put on is definitely price. And Mario, I think that would be kind of, remind me to look at Tesla, Mario. I'll give you a perfect example. We made a great call on Tesla. We have forecast, I think over half of that drop, and it's just price, right? And I can show you variations. Nvidia's big rise, and we can do that too. From way back in 2022's low, it was easily forecast. Doesn't mean easily going to work out. I'm just saying it's easy to forecast. Say, hey, this is what it looks like it's doing. All right, good, Mary. Strangles, yeah, love those, but they can be tricky, right? You got to pick the right strikes and all that kind of stuff. But all right, good deal. Well, I appreciate everybody participating. Like I said, these calls tend to go better when I'm not just talking at people. And it's wonderful if I can give you something that you can take with you, right? So you didn't waste an hour of your day or something like that, right? So here's the process. And I went through it. And having been a coach for so long, the overwhelming majority, if not everyone I've ever coached, has either been through this or is going through this, especially due to the day and age that we are in. It's not 40 years ago, right? So we have access to a plethora and unlimited amounts of education, some good, some bad, right? Nowadays, with trading platforms and software, everybody now can create their own little indicators. Heck, you can go to Chat GBT and it'll create one for you, right? So the journey we all go through, though, stands the test of time. Hey, Ann, good morning to you. There's a familiar face. We enter the market, right? Maybe Mary, you can relate, right? You said you got in about 3 months ago. We get into the market, we start getting some education somewhere, somehow we learn something. Okay, we get out there, start trading, may have some success, maybe we don't. Okay, at some point, it tends to all go the same way. Where we start to have some struggles, some challenges, start to lose some money. I have yet to meet the person that they just hit the ground running on day one, right? Unless, of course, you have an account on X and amazingly you've just been great forever and you never have a losing trade. Other than those people, most of us have to learn the hard way and take our hits at some point. So, what do we naturally do, especially in today's day and age, right? We go look and start using somebody else's strategy and or their indicators. Okay. This person says use this. This person says use that. This person says use both of these, right? And so forth and so on. Maybe it works for a while, maybe it doesn't. And then next thing you know, you find yourself in that exact same boat. Okay. Remind me of that question later, Mario. Yeah. And I don't know that we're justifying it will go up to 900 or anything, but yeah, I can show you why we think it's a pretty good target. Um, Keeping it very simple, keep in mind at one point today it was up 40 and the market wasn't even up that much. Imagine if the market did rally. So that probably answers your question there. Right, getting to 900 would be pretty easy. You know what I mean? But anyway, so we kind of do that, and then it's just more of a wash, rinse, repeat. Anybody been through that? Anybody have already gone through that? Right? Where at first you started with, hey, I learned support resistance, and then you added some moving averages, and now you're adding the MACD and stochastics, and now you're adding some Bollinger Bands, and you got your Fibonacci up there, and then okay, now I got the VWAP, and okay, anybody been through that? Next thing you know, kind of confused, not really making any money, maybe even losing more. Okay, which is common. So if you're going through that or have been through that, just remember that it's not a you thing. It is that kind of normal trial by fire that the market puts us through. Okay. It's something and what happened, what I kind of refer to this is this indicator fallacy. Okay. We get stuck in this little hamster wheel of belief that at some point we just find the right indicators. Okay. If I just keep looking, if I use this guy, next thing you know, you have more indicators on your screen or in your head than you know what to do with. Okay. This thing's telling you to buy. This one's telling you not to. This thing's telling you to short. This one's telling you that. Okay. And it's a big, juicy, hot mess. And if you've been there or you are there, okay, you probably already know what I mean. Probably don't have to convince you. All right. So when it comes to what I tend to teach, or what I do teach, and what I encourage, all right, is a handful of big ticket items. But I like to always start with a simple analogy, equating to this as somewhat like you know golf, playing golf. Okay, where we have been somewhat duped, whether intentionally or otherwise, is the idea that when it comes to playing a successful round of golf, that is going to be dictated by the brand of clubs that we bought. Okay. When the reality is the clubs don't have a whole lot to do with it. Yes, we need clubs. Yes, we prefer that they're not broken. Okay. I would prefer to drive with my driver and not a pitching wedge. But the point is, whether we have a good round of golf or not, or whether we beat our those in our foursome that day, is generally going to be dictated by the basic fundamentals of the game, not the clubs. Okay, my brother-in-law plays around par golf. It doesn't matter what clubs you give him or me; he's going to beat me every time. Not we could swap clubs; it won't matter. The clubs have nothing to do with me losing to him every time I've ever played, right? It's about the grip, the stance, his backswing, connecting with the ball, the basic fundamentals of the game. And I hate to break it to all you, all those folks out there that are, infatuated with their indicators and their six screens in front of them, but none of that has a whole lot to do with you succeeding in trading either. You can think about it. I mean, it's not an opinion, it's just a fact, isn't it? Isn't it a fact? I mean, if your VWAP has everything to do with it, then how in the world is that guy over there winning with Bollinger Bands? And if it is about his Bollinger Bands, then how in the world is that woman over there succeeding with point and figure? I don't get it. Get the idea? It's not about the clubs. Never has been. With the exception of one, right? Price. But that's a fundamental. Price is king. Price is the only thing that pays. Price is the indicator that no one's looking at. Is this not sexy? Right? We got these software programs, got six of them, three screens in front of me. What do you mean just look at price? Well, I don't know. People have been doing it forever. People do it today. We do it. We do just fine. It's kind of like when the army rolls up in Braveheart, and the guy says, "Well, we didn't get all dressed up for nothing." Right? That's our attitude. Well, we don't have these indicators for nothing. Well, I mean, I'm not saying they're bad, but we want to make sure we understand what's ultimately leading to your success in the market. Okay, and it's not that. You can use whatever you want, whatever floats your boat. Okay, but you're not going to succeed because you used, you were doing Elliott wave counts and this guy wasn't. Okay, it's going to be because you managed risk, you were in good risk reward setups, you were able to be disciplined, so forth, so on. Okay, it won't be because, oh, I win because I use Elliott. No, no, no. That's just the club in your bag that you're using. Use whatever club you want. All right. And that's probably, if not definitely, the biggest lesson I try to teach my students from the get go. As long as you continue to buy into the indicator fallacy, you will continue to fail. No one has ever succeeded in trading without what I just mentioned. It doesn't matter what indicators they use. Doesn't matter. There's no indicator that's going to save you from bad risk management. There's no indicator that caused you to blow up your account or not, right? At the end of the day, if you have those core fundamentals down, you're going to succeed no matter what. So, in short, what I encourage is everyone to keep it simple. All right. Sure, it's great to have this icing on the cake. You're going to see an RSI. As a matter of fact, I'm going to show you the RSI because that's how we were able to forecast this correction and the 2022 bear market and, four others. It wasn't really too terribly hard. There's nothing wrong with the icing on the cake, but not too many people say, "Hey, can I just get rid of the cake and have a big bowl of icing?" Now, some do, but I would say most don't. Okay. So I always like these quotes just about keeping it simple. I kind of like the last one. Simple actually can be harder than complex in the world of trading. Right? It's very difficult just to focus on price, good risk management, good risk reward. When I can pull down that drop down menu and have my choice of 200 different indicators. Right? Very challenging. Okay, and like the one above says, well, anybody can complicate things. It's a little bit harder to keep it simple. All right. Now, if you don't believe me, I'd like to not bury leave. These are the equity curves from two of the four services that I operate. And I'll show you the one from LTS a little later here. And all I'm doing here is what I'm explaining to you now. We spent this whole morning, anybody that's in Gambit, we spent all morning talking about the value of risk management. We had a member that was in a trade where he was risking 24 to 1. And so we walked through. Now, it's not about the option strategy. He referenced the delta. Well, it's not about the Greeks. You're going to lose because you're risking 24 to make 1. When you need a 96% win rate just to break even, probably going to struggle in your trading. Just a little guess. Probably going to struggle. Okay. But hey, if you can put yourself in position to risk 1 to make 5, who cares about your win rate? You're going to win no matter what. Just can't be wrong often enough to lose. You can't be wrong often enough as long as you need to lose. Okay, so I try to teach my students, look, forget all the marketing and the hype and the nonsense, right? And the information overload and the indicator fallacy. If you can just get these basic things down, you're going to succeed in your trading. And then fine tune it as you see fit. All right. So, any questions on any of that? I'm imagine not. Before I switch to, I'm gonna switch to the live screen here and look at some stuff and some things. Make sure I don't forget some of these questions here. Mario's questions are really good questions. I saw Mixman's question here. Oh, okay, so you're probably talking about the here and now. Okay, gotcha. All right, we can look at some stuff and see. All right, so let's go ahead and get into it here. All right, everybody see my screen up here? Now, if you decided to join LTS and hop on board with me, good news is it's called Lifetime Trading System for a reason. I'll be working for you as long as you need. Okay, once you're in, you're in. Kind of like the the scrolls or the skulls or what are they called? Who cares? But LTS includes 5 different coaching sessions a week, right? So I'm with you almost every day to help guide you through the market, navigating so you're not alone. All right. Any call that you hopped on, this is what you would see, right? This is what I typically have up. So everybody see this? A few people could just chime in. That's a great analogy too, Mary. I just saw that. Yeah, I have a great camera. I bought a great camera to take some pictures of some products for e-commerce. I learned very quickly what you just said. Okay. It's not about the camera. Or anybody see Top Gun Maverick, right? It's not the plane, it's the pilot. But I digress. So real quick, I just want to make sure, can everybody see the screen, the my thinkorswim screen? Just want to make sure. I'm not the most tech savvy person in the world. I just want to make sure that I got this up there. We'll spend most of the rest of our time here. Yes, Steve, it is. Yes. So I assume that means at least you see it. How about everybody else? Everybody else seeing this? Real quick, can everybody hear me? Oh, okay. There's Mary. Okay, good. So please, please, just at least so I know that you can hear me, just throw in a Y or something there so we know. Okay, cool. All right. So this is the screen that I would have up here. Okay, we don't necessarily make too many trading decisions. This is hourly stuff, but it gives us a closer look. And certainly, if we're trying to do some fine tuning, trying to be a little bit nimble, I don't personally go any lower than this as far as time scale because we're not really trying to day trade. Okay. Now there are some times and a lot of times that we're in a trade and we're in and out pretty quickly, but we're not sitting here trying to trade 1 and 5 minute candles or anything like that. We want stuff that's a little bit more meaningful, okay, and matters more. I don't know that there's a trader on the planet in the history of this, you know, universe that's ever been able to call major moves based on a 1 minute candle, right? So we need to kind of pan out to get a better idea. All right. So the first thing I want to do is talk a little bit about how we were able to call this correction. S&P is knocking right on the door. 5530 is correction territory. Okay. Now, taking a step back, I don't get too much into the why. Okay. I think that is very much a waste of your time. Okay. Who cares why the market is selling off? It doesn't change that it is. All right. Our job is to trade it. Okay. So if there's a reason, doesn't matter. If there's not a reason, okay, we don't get too much into that. Okay, we subscribe into the idea that everything that is known by the market right here. This is my news feed. So I don't care what Phil and the Blake analyst has to say on Fox Business or CNBC. Okay, they're just puppeting what we already see is happening. And they're making the narrative, right, or the news feed fit the price action shoe. Okay, if they truly had any idea what in the world was going on, then why weren't they able to call this? Okay, because there's nothing happening here that we didn't know was coming. Okay, that being said, I think it's important to remember that if we pan out a little bit, the NYSE peaked back at the beginning of December, not 2, 3 weeks ago, you know, 3 months ago. Okay, same with the Dow. The Dow actually is closing high. It's back from the beginning of December. Russell. Russell peaked before that, a few days before. Russell is just a hop, skip, and a jump away from a bear market. Okay, it's been dropping for quite some time. Okay, the final gasps were the NASDAQ 100, which, by the way, keep in mind that high that you see 3 weeks ago was never confirmed by the composite, thus supporting the idea of the top heaviness of the market, which, by the way, we reached the most top heavy market in history as we turn the corner on the year. And top heavy markets occur at market tops, not at the bottom, which I'm sure you can figure out, right? S&P obviously got a high similar to the NASDAQ 100 that was not confirmed by the Dow, right? So we're not thinking much about it at the time, but the non-confirmations between the S&P and Dow and NASDAQ 100 and the composite are concerns. Okay, just because there's a non-confirmation doesn't mean a market peaks or bottoms. But when markets peak or bottom, there are commonly non-confirmations in place. No different than say back in the 2015-16 correction. No different than the COVID smash, right? No different than 2007 and 2008, that whole thing, right? Non-confirmations commonly appear at tops and bottoms, but we know that a little bit more after the fact. Our bigger concern, let's pan out. Okay. Now, I won't get, again, I don't want to get too buried in the weeds about, you know, uh, uh, RSI and get too much into the inner workings, but it's a momentum indicator. Many of you probably use one. Maybe you use this. Okay. Um, maybe you use the stochastics or MACDs instead or something, but it's just a momentum indicator, right? Are you using Scan Tab? No, no, I don't, Mario. No. I don't need anything to scan for me, Ryan. Once you kind of know what you're looking for. Um, so all the drawings and everything you're going to see here, all of that is me. Okay. Um, massive problem with the public is retail trading programs, depending on trading platforms and scanners and screeners, everybody to do all your work for you. I liken it to like a calculator. I don't need a calculator to help me figure out 2 times 5 or 3 plus 4. Okay, we want to have a deeper comprehension of what's going on here. Then we don't need any of that stuff. Kind of like I don't need the Greeks to know when I buy way out of the money, that's a low delta, right? I'm buying I don't need to know that. I don't need anybody to show me that that's a lower probability trade, which doesn't necessarily translate into, right, low probability trading. So I like to teach my students to be able to kind of think for themselves so we're not to the slave to what we see here. So every little line, every little pattern, every little thing you see is something I decided was pertinent, not the platform. Okay. So RSI, relative strength index, measuring momentum. Overall, you can see it just kind of moves with the S&P. These are monthly candles. All right. And you can obviously see my 6 highlights in the bottom. Okay. But one of my favorite signals, if you will, I think it's more of a condition or an environment than an actual signal. It's not a literal buy or a sell, is it? You know, no. Okay, we use price for that. But you can see, take for example, the bull run leading up to the 2007 peak. Okay, you can kind of see as price went up and then down and then up and then down. Notice how the RSI is just kind of going with it. All right, price hits a new high, price hits a new high, right? And we're just kind of going along with it up until the very last high. You're going to notice the RSI peak here was lower. Okay, this is what we call a negative momentum divergence. Momentum is diverging from price. Now, if we flip this upside down, we call it a positive momentum divergence. Price is getting weaker on the downside as it goes lower. In this case, price is getting weaker. Its momentum is weakening as it goes higher. So, though you'll see all the, as I call them affectionately, the bobbleheads across the financial networks talk about how strong price is, the RSI is telling a different story. That it's actually not strong, it's actually weakening. And so you want to think of this somewhat along the lines of if you threw a ball in the air, okay, the momentum at which that ball is rising is going to start to decline before the ball actually does. Eventually, the ball will follow the momentum, right? So that's the idea behind this. Okay, now when it comes to anything in the world of technical analysis, it's all fractal. This is monthly, this is very big, okay, has nothing to do with day trading. The smaller the scale we look at, these things still appear. This can appear on a weekly. This can appear on a daily. This is 30 years you are looking at here. Okay, we've only had six on the S&P, that is, in 30 years. But if I'm looking at an intraday chart with 5-minute candles, I could have six of these a day. So what that means, or what that's telling you, is that they're a lot easier to form. They don't mean as much, more likely to fail. But if we pan out, it is difficult to get these things to form. It takes a lot of price action coming together. That is why, prior to here recently, this condition has been 5-0. So if you want to know how we were able to call the 2022 bear market, here you go. So when you heard me say earlier it was easy to forecast, doesn't mean it's necessarily going to happen. We're forecasting and then it happened. It's easy to forecast it. Well, because look what happened the last four times we did it. Back of the napkin, we got and again, when I refer to, I realize all the bobbleheads want to call everything a correction. If you want to call everything a correction, knock yourself out. When I speak with a correction, I'm talking about the traditional technical definition of 10% or more, bear market 20% or more, right? There are other factors, but that's the generic run of the mill there, right? So the previous four times, we got ourselves a 20 percenter, as I think it was a 18 or 16 percenter. Got ourselves a nice doozy of a 50 percenter and a almost 50 percenter back there. So what did we forecast here? Oh, I don't know, somewhere between a correction and a bear market. Wasn't hard. We got 25% or 27%, I think is what it was. So see the problem here? The last peak, the S&P, put in a lower high. So 2 Fridays ago, I believe it was. Oh, I'm sorry, 3 Fridays ago, when the S&P broke down pretty hard after just having hit a new all-time high 2 days before. We'll go back to that. Immediately then, so this is 3 weeks ago, we said, uh-oh, sure looks like odds are high, elevated, that this could be something somewhat of a doozy. Some analysts will look at it and say, that there's a bigger divergence going on here. Look at these three combined divergences. As we've hit higher high, right? Notice how these divergences are getting lower as well. Right? This divergence much higher than this, but notice how we keep dropping. Some think maybe we're seeing the makings of a massive decline, unlike something we haven't seen in our lifetime. Time will tell. We're focusing on this. right? Now, this is the condition. This is the environment. We want to see price confirm it. So just because we put in this momentum divergence, we didn't call it right then on the spot. What we wanted was we wanted price to confirm it. Remember, price is king. Price discounts everything. Can't fight the tape. Price is the only thing that pays. Exactly. So here's what we were looking at. This wonderful channel tested 1, 2, 3, I don't know, 4, 5, 6, 7, 8, 9, 10 different times. Remember, the market drew this channel. Mario, this goes to your question. Identifying ups and downs. Okay. Now, this is the market. And for every trade that I ever put on for any service ever, we subscribe to the idea that we rise and fall with the market. If the market's going to drop 10% in 2 weeks, odds are low, we're going to do well with calls. Okay. Odds are better if we have puts, right? Remember, 50% or more of a stock, an underlying stock's movement is due to the market. So it's going to be due to the market and the magnitude of that. So notice how today we've been waffling back and forth from up and down or whatever. We got a mixed bag over here, although we are still down. But when we have these nasty little 4% day and almost every stock in your watch list is down, it's not because every one of those companies magically had bad news that day. Man, what happened with such and such today? Nothing. The market's down. So I'll always get asked questions. So what do you think such and such stock's going to do? Well, in all likelihood, whatever the market does. And then we'll take a second look, right? Trying to break that mindset that these stocks, that this is the MCU and we're in the multiverse, right? And the indices are on, Earth 616, and the stocks are on all different Earths from around the world. Same thing with options and stocks. Another problem I've seen that many of my option traders, if not all of them, have had is they're trading options with an independent mindset of the underlying security. Now, they can talk my head off about the theta, the delta, the gamma, right? But they're not looking at the number one factor. At the end of the day, today, as Mario pointed out, we put on calls for now. If we lose on now, we will lose because the stock went the wrong direction first, not because we chose the wrong delta. At the end of the day, sure, if I choose a strike that's closer to at the money or whatnot, or maybe even in the money, in theory, that's a higher probability trade. And the reason I say in theory, well, the stock has to go up first. And everyone skips that, right? So anyway, back to the point at hand. This was our price confirmation. Breaking out of this channel, uh-oh, that sounds like a problem. And the rest, as they say, is history. Earlier today, we were talking about what we think, where might a rally stall? Well, look where this rally stalled, right back at the underside of that channel. In other words, that old support became the new resistance. If you flash forward, now, I won't flip back and forth, but the NASDAQ 100, which was taking a beating, put in a weekly positive momentum divergence. If you look at the S&P, you'll notice right here, the daily momentum divergence. Look. But look. Right? So this was telling us price was weakening on the downside. Just told us to be prepared. This rally might have some juice. But the NASDAQ put in a weekly one. That's bigger. It means more. Small scale, small implication. Bigger scale, bigger implication, and more reliable. So like many, we are following this big old green trend line, right? Tested once, twice, 3, 4, 5, 6 times. Broke on through. That was our price confirmation. Now, you're going to notice any number of other little patterns along the way that have guided us through all the big moves. Little rising channel here, broke out of it, probably going lower. Harder to see, I know. But this little trend line here, right? Broke through it, probably going higher. You see the orange back here. Little rising wedge implies, we could be in trouble, and break down, so forth and so on, right? That's what all the others. But what I draw your attention to is the big channel here in pink. Sound familiar? Monthly momentum divergence going into 2022. Price confirmation was the breakout of the channel. Well, what do we have here? Monthly momentum divergence, S&P breaking out of its channel. Okay, we also saw the breakdown of this trend line, but this is the Friday here from weeks ago. Okay, right there. Okay, I believe this was almost exactly 3 weeks from Friday. That breakdown. So in other words, 2 days after the high is when we started forecasting all this. Why? Was it because we were listening to Fox Business or CNBC or reading on Mazinga or doing some stuff on TradingView and listening to this person on their podcast? None of the above. Price is our news feed. The market, we listen to it. The market told us the environment was ripe for a massive breakdown. Price confirmed it. End of story. What did we see happen yesterday? Well, let's take a look at the NASDAQ futures here. 100 already broke. But look at this wonderful little trend line. Once, twice. Remember, I'm not drawing this trend line. I'm just adding the color. The market's the one that keeps bouncing on it. We got one bounce for a day. And then look at us breaking down. All right. So using in for those that are kind of knee deep into technical analysis, hopefully everybody can see at no time yet have I done any Elliott wave counts. Although I could, I'm an expert in Elliott wave. I could slap up the VWAP for you. We could talk about volume profiles. I don't know. It sure looks like what we're doing is pretty darn effective. And that's what I mean when I say everyone's been duped to think that this you can't use the stuff that's been working forever. Price, price patterns. Yeah, you can. Anybody tells you otherwise doesn't. I would probably run the other way. I definitely wouldn't give them my money because they don't know anything they're talking about. That doesn't mean you can't use the new stuff, but that new stuff isn't better than the old stuff. It's just different stuff, right? I mean, John McEnroe used to use a wooden racket. I have a graphite one. I'm gonna guess he still beats me with the old stuff. Still plays as good as a game, right? So I want everyone to notice if you're going down that indicator fallacy road, don't let anybody take you there. Don't fall into this. Hey, if you're not nowadays, the latest greatest is the VWAP. You're not at any disadvantage. All right. Don't let anybody lead you to believe otherwise. Okay. I just showed you two of our track records. I'm going to show you a third. And those are three different time scales, by the way. In other words, what I educate my students stands the test of time, stands the test of time scale, right? And all we're doing is what I just showed you here, right? So I don't know. I don't know how a track record looks better because you're using your Fibonacci retracements with your Bollinger Bands. Okay. As I said earlier, as long as you have the basic fundamentals down, everything will work and everything fails. But as long as you're managing risk, position size, and you're in good risk reward setups, and you can be disciplined enough to see that through, you're going to win no matter what you're using. In other words, regardless of what clubs you have in your bag. All right. Now, other things I wanted to show. I mentioned NVIDIA. NVIDIA's rise. Again, notice how, just these price patterns, the levels, the resistances, these are key levels, important prices. This price back down here was an important price for NVIDIA before, obviously, it split. It was a different number. But if we go back, right, NVIDIA is giving us all kinds of key breakout points. First off, this one we're going to have to look a little closer. Okay. Look at this inverse head and shoulders. It's a bear, or it's a bullish reversal pattern. More importantly, here's the neckline or simply the trend line that was created by it. Once it broke out through it, that was our sign, probably running back to the highs. And by the way, it's on tape. I mean, these calls are recorded. Okay. We made that call based on price. Came back, doubled down, bounced on it, and the rest, as they say, is history. Finally broke out. Now, this was 500 before the split. Look at that perfect little pattern, little price pattern. Can't get through it, can't get through it, can't get through it, can't get through it, can't get through it. Hey, check us out, we're through it. Probably running higher. Hey, look at us. All right. Look at this old level here. Can't get through it, can't get through it. Pop through it. Probably going higher. Okay. When we eventually came back, notice how, even though we dipped below, we rallied right back up above my little green line. Okay. Keeping in mind, this was pre-split. So it wasn't 97 bucks back then. Notice how a couple days later, we bounced on it again. Once we finished up this consolidation, took this out, probably running the new highs. There you go. We can take out this zone. Oops, we never did. All right. And then I promised you Tesla. Okay. These are how we're making our trades. This is how we went 4-0 last week in VelociTrader and whatever it was, 2-1 the week before. Not doing anything crazy. Right. You don't need all the stuff that you're led to believe that you do. Okay. Tesla has a very big, let's pan back out here on Tesla real quick. I want you to see this kind of 270 level. This is pertinent to the analysis we were doing. Okay. We've got all kinds of trades on Tesla over the past few weeks. And this slide, at least this part from here down, all forecast, easily forecast. Matter of fact, when we broke down here, still in the high 300s, we called for 270, possibly 270. Let me rephrase that. Possibly, no reason to believe it couldn't go back down to the 270. Why 270? Look how important that breakout level was. Tested once, twice, three times. The market is saying this price level matters. Oh, you mean resistance? No, if I meant resistance, I would have said that. Yes, this price level is acting as resistance, but there's a million resistances on here. I'm not going to make trades just because we take one out. There's a million supports on here. Who cares? What we want to find are the prices that stand out as more important. Some are easier to identify than others, and this is one of them. Very easy. It's like a little haircut right across the top. Once we popped above it, seemed pretty good. Hey, this thing's probably taken off. Oh, look at that. It took off. Okay. Now keep that orange 270 in mind. Okay. I'm going to zoom in a little closer here. Okay. Now we saw this nice little triangle consolidation, right? Again, market's drawing this, not me. I just add color to it. Here's the top, tested once, twice, three times. Here's the internal one, tested once, twice, underneath, one, two, three different times up top. Market telling me this internal matters. I do care. Why? Doesn't matter. Doesn't change that it is, does it? So when we broke here, our view was very simple. Well, we're definitely coming down to this old 360 breakout point. But if we're breaking out of this, we thought we'd break higher. Okay. To be clear, we thought higher. This consolidation looked like higher. Remember, we hadn't been falling apart yet. Market hadn't been in this little down move yet. Seemed like it's just a matter of time before we pop to the upside. Nope. Downside. Didn't argue about it. Okay. Not going to argue with you. I don't care about your fundamentals. I don't care what's happening in the political arena. I trade the market, not politics. Got to trade what the market's doing. So that's why this is my news feed. I am breaking down, definitely going to 360, but a breakdown from something like this probably isn't a 2 or 3 day event. Probably taking out 360. If we take that out, it sure looks like there's not a whole lot stopping us from getting back to the old breakout point of 270. So I want to be clear, we made that call back here, back at the beginning of February, well over a month ago, just because price, probabilities, odds are, there's no guarantees, right? That's why you end up with some of these clowns that because once some sort of breakout doesn't hold, oh, see, technical analysis doesn't work. By that measure, neither does fundamentals, right? All kinds of good company stocks are tanking. What's wrong? Your fundamentals don't work. Nobody ever said they do, right? Not putting, probabilities or odds are. The environment is right is something I like to say a lot. The environment's right. Price action consistent with. Well, this is what we did. Not only did we, and notice how we got our bounce. This was one of our trades we put on in Velocity. We captured the bounce, but it didn't hold long, did it? Before we ever took this 270 out, our analysis was, hey, man, look, this thing doesn't hold 270. There's a lot of open air down to this 235 rung. Look at that. Made it there yesterday. Notice how price is telling us everything we need. It's simple, it's pure, it's not complex. You can't argue with it. And unlike a moving average, it's not changing its mind because price is actually what's making the moving average do what it does. Okay. And I also want everybody to remember that at no time, right, am I, quote, using anything else. I don't need to. Okay. The simpler we keep it, the better we tend to do. So that's what we're doing, keeping it simple, right? Now, I want to be clear. Don't get me wrong. There's nothing, okay, if you want to, use this and use that or whatever, just don't fall into the trap of thinking that there's an indicator out there that's going to save your trading. It doesn't exist. Fact. If I am incorrect, I am still waiting 18 years later for someone to show me the indicator that beats risk management, position size, risk reward setups, discipline, market psychology. If you've got it, please let me know because I mean, we'd all like to use it, but you're probably going to find out it doesn't exist. Every strategy slash indicator is going to deliver losers. They're all going to fail sometimes. There's nothing perfect. Okay. And that's where those core fundamentals come into place. As far as an indicator, we're using an indicator too. We're using price though, the thing that matters most. The only thing, by the way, that puts money into or out of your account, right? I mean, last I checked, the 8-day moving average isn't putting anything in your account. No matter what the 8-day moving average does, my account doesn't change. Price does it though. So we focus on the thing that matters most. And as you saw, we do pretty well. All right. Now, before I switch back over, now I'm going to hang out, by the way. I'm going to hang out, here and let me switch back. All right. Everybody see my old chart there or my old slide? And I'll come back to the thing and answer questions for anybody that has any late, but I want to make sure that we kind of wrap this up for everybody, but everybody see the new, just say, what if you had a trading coach? Everybody see that? Now I am going to wait just to make sure. Okay, great. Thank you, thank you, thank you. And so, of course, that was a crash course. That may be, even if you've got some experience, there's a lot of little things I'm looking at, paying attention to, and I could go on forever. Okay, any of you on this call that been anybody that was on the call this morning I was on, I could go on forever, right? And taking deeper dives. So I understand no one's expecting you to take, all of this and just boom, I got it. But that, okay, so what if you had a coach to help you though? Okay. It's interesting how much time and effort we'll spend in YouTube videos and so forth and so on, and we won't make this investment in ourselves. And then we wonder why we're not finding success. There's nothing wrong with getting a coach as long as it's a real one, right? Actors have coaches, athletes have coaches, business owners have coaches, right? And my guess is they're doing that for a reason, right? And on top of that, what if you could find a coach that gave you everything you needed? Circling back to what we mentioned before. Okay. You feel like you need the education. Maybe you don't feel like you need the education. I want some setups or I want some trades. Or you know what? I would just like a professional to help me and be that caddy on the golf course with me. Someone that could check me, check myself before I wreck myself. So I can bounce my trade ideas off of. Get help when something goes wrong. For example, the gentleman this morning needed help with that trade. That's why that's how I found out he was risking 24 to make one. He wanted to know if he should stay in it or not. And I said, look, I'm not going to sit here and try to tell you market's going to go up or down right now because right now I hate that trade so much. I have to tell you about it. Okay. So, and then I mapped it out where he had no idea that that's what he was in. All right. So this brings us up to the lifetime trading system. Okay. So give me a couple more minutes. I'll walk you right through it. And simple stuff here. I'm not here to sell you anything. If you're interested, great. Josh is here. Have a conversation. Okay. If you think it's right, get all your questions answered. Okay. But I'm going to walk you through what is the lifetime trading system. Let me focus on two words here: lifetime and system. As I mentioned earlier, lifetime means simply that. Once you're in, you're in. Okay. So you're not going to be hit up for more money 3, 6, 12, 24 months from now. If you need help, I'm going to help you get it down if that's in the cards for you. Again, I'm not going to make any false promises. Yes, everybody can do it, but I've worked with a lot of students that they just can't control their emotions, right? They can't get out of their own way. But if you have success in you, I'm going to be here with you as long as you need it. System. What do I mean by system? Well, as I've been alluding to, it includes everything, whatever you need. Okay. Number one, if you feel like you need the education or simply, hey, trading, but I'd like to learn a little bit more about what you were just going through because I think I might be overcomplicating or I think I'm not focusing on the right stuff. Excellent. That's what my stock and options video library is all about. Okay. These are the 16 videos that I put together, the tutorials I put together for my students before we go into one-on-ones. Okay. But I give them now to anyone that comes into lifetime trading, so the LTS. PDFs for those that like to read it instead, both. It's okay. And this is on demand. Okay. You can go in, play one video, come back some other time. Half of the video. Okay. Already done all the education there. You don't have to worry about all the nonsense and gimmicks and scams that you get from the YouTubes, right, and the TikToks and all that. Okay, this is real education, really showing you what I do. And if you're new, don't worry. I started off like at zero, literal zero. This is what a stock is. Okay, just to be safe. All right. So there's the education. Okay. Number two, okay, I bookend your week. Okay, the market rundown. Okay, that is the end of the week video that I put together, just breaking down what happened that week. And by the way, I'm going to show you all the members area. Okay, I'll show it to you so you can see it yourself. All right, I think so if it lets me. All right, but the rundown at the end of the week. Hey guys, here's what we did. Last week we recapped all four of our winners, and it's a coaching call. So I explain why did we roll those calls down? Why did we roll those puts up? Why did we close this? So forth and so on. Then I start your week off with the Roundup newsletter so you know exactly what I'm seeing. Okay, great, Christian. I don't know. It's going to take me a while to get this market stuff down. No problem. That's what I'm here for. Okay. That's what I'm here for. The newsletter, I'm going to tell you exactly what we're thinking. Everything I just walked you through, this is why nobody ever quits LTS. I did the work for you. This is done for you. Okay. I'll break down the markets every week. You're more than welcome to disagree with my analysis, but I'm going to do it for you every day of the week except one, which is Tuesday. That's the only day you don't have a call from me or this newsletter, the Roundup, which is posted before the market opens. So it's actionable. It also includes a trade idea to start your week off, sector analysis, and for those of you trading crypto, what Bitcoin's been doing. Again, it wasn't, most of it's not, wasn't too hard for us to forecast. Okay. Those of you that want some trade ideas, I love this stuff. I'd love some ideas. That's what my DTCs are, the daily trading cheat sheets, every day, done for you. I will do the screening using Mario's word. I'll go find the trade setups for you. While you're getting the education, while you're getting the coaching and catching up to being able to kind of take those training wheels off yourself, I'll do it for you. Every day that the market's open, you get a DTC. My students are trading our trade alerts or the cheat sheets. When they need help, if you go to number 5, that's why you have me as your personal support coach. And I'll show you a little button. I call it the bat phone. If you ever need anything, I'll help you with your trades. Number 4 in the middle, that's the coaching clinics. There's 3 of those, and I'm going to show you all of this so you can see it for yourself, by the way. Okay. We do a chart school where we talk mostly about charts and setups and the divergences and all this wonderful stuff you saw today. We come back later in the day. We do an options boot camp. Typically, we put trades on. We did yesterday. We're in 2. We're in Okta, and we're in Reddit. Those who want to hang out, I'll show you what we're doing, what we're expecting, so forth and so on. Be more than happy to do it. Thursday, we come back for the Trading Academy. Okay, that's where we kind of put it all together. Maybe put a trade on, but not usually because it's it would probably be a one-day trade. Right? So literally everything, but right, the best part, VelociTrader. Okay. As I mentioned earlier, trade alerts. So, of course, there will be an investment that Josh or whoever be more than happy to discuss with you, but we're going to make you money along the way. I'll give you the trades, not just the setups, the DTCs for you to trade on your own and ask me for help. But last week, the Lost Trader went 4-0, made slightly over $2,000, I think $2,300. Week before, I think around $1,000. Those are the trades that I put on, manage, entry, exits, everything. Okay, and those alerts come to you instantly. All right. How's VelociTrader doing? As I said earlier, doing just as good as everything else. Because this, as long as you're applying the basic fundamentals, it's always going to look like this. Okay. We do very well. Okay. Again, it's only $500 trades. We average about $1,000 in profits a month. We have since inception over 2 years now, 2.5 years. Okay. So in theory, even if I told you LTS was 12 grand in 1 year, if you follow my trades, you'll make it back just on my trades. Okay, and your education is free. It's not 12 grand, but I'm just saying if that was what we were talking about. And that's only if you put $500 a trade. Maybe you put $1,000 a trade. I've got members that put 2 grand per trade. They had a pretty nice week last week, right? 8 grand. All right. I always like to show some of the neat little comments and stuff I get from my students, right? I don't solicit, I don't ask for anything. This is them just keeping in touch. Remember, I'm working with these, we only let 2 or 3 people in a month into LTS because I'm personally going to be there for you when you need. Okay. So I know Elliot. I know Kenneth. I've met them both. All right. So just a couple wonderful testimonies. Elliot's is kind of cool. Let me tell you what that was all about. He had sent this screenshot to me, thanking me for his, he's been having a great 3 months or whatever. Now, I found this confusing because he had been an LTS member for like a year. So I asked him to send me the rest of that. And it was actually his equity curve was in a downtrend until this screenshot. And I said, wow, what happened? I don't understand. You've been a member that whole time. Why is everything all of a sudden clicking? He's like, well, it's not that it's necessarily clicking, but I have been leaning on you for my market analysis and such. But I would get your newsletter and it says bullish, but I wasn't attending or replaying your calls. And I didn't know that maybe Monday afternoon you switched bearish because of something the market did. Once I started paying attention to each of your calls, that's 5 calls a week, and the newsletter, my results changed. In other words, I knew when the market was changing direction before before I was in the wrong side of it, right? And again, I got a ton of these. Like it's just kind of cool when people send you good stuff, right? So now, the only question you have left is how serious you are about reaching your trading goals. Hey, there's a lot of free stuff out there. If that's working for you, have at it. Of course, there's an investment here that Josh would be more than happy to talk to you about. Okay, see if it's right for you. It has been for quite a few people, and we've never had anyone leave. Well, there was that one guy, but that's a whole different thing, right? But um, and there's a reason for that. Okay. There's not a whole lot more you could ask for. Again, you got the education, you got the coaching, you got the support from me anytime you need it, you got trade ideas, you got trade alerts. And so are you ready to invest the time and put in the work? Are you willing to invest in yourself? All right. So if so, obviously you can see Josh is putting his email down there for you and his number. You can call him. Believe it or not, you can actually speak to people. Okay. Now, real quick, I do want to show everybody the members area. Huge fan that people get to see exactly what we're talking about. So give me just a moment. I'll put this up here for you. Oops. Pardon me, I'm working on it. All right, here we go. All right, everybody see that? Just let me know if you see it. It should say, you should see the little green lifetime trading system. Because I always like to show everybody so there's no surprises, no mysteries involved. You know exactly what's happening. Everybody see that? Okay, great. Thank you, Wayne. Just want to make sure. All right, so this is the members area. It's very, very simple. Love it, straightforward. This is kind of the main dashboard, so to speak. Okay. And first off, you can see everything I mentioned. Here's the tab for your stock and option trading library. Let's go right on in there. Okay. Break it down into 4 parts. So you got your stocks 101 and 102. Stocks 101 is where I lay the foundation. And yes, I am teaching my strategy too, right? I mean, overall, that's the idea. Then we got a little bit more and take a deeper dive into things like the RSI, the patterns I think are most effective, some of the candlesticks that I think are worth knowing. But you don't have to, know them all. Okay. Just the ones that I think, in my experience, have been the most effective and reliable. Same thing with options. I do have an exceptionally unique, one of a kind way of viewing options. Okay. And if there's anybody on this call here that is already a member or student of mine, you can probably attest to that. There's no Greeks involved. Okay. It is kind of applying that same common sense, sensibility, keeping it simple type approach, right? But they're all right here. And as you can see, the PDFs are right there for you to download or whatever. Okay. Here's the Market Roundup newsletter. Okay. And there's that same analysis. Okay. That you see me kind of pointing out. It's an older newsletter there. Where's our new newsletter there? Right. So I kind of break it down. This was this week. We last 2 week winners. This was what 2 weeks ago, I guess. We almost actually went. That's right, 3-0. We almost went 3-0. We had a 200% sell limit set on our VST trade, and it missed it by a nickel. So unfortunately, instead of making 1,000, we would have made $2,000 that week. Missed it by a nickel. That's how close we were to going 3-0 with 2 grand in profits, right? But look, it's all the same chart patterns and everything. There's the fake out on the S&P. There's that little line, the breakdown. I'm doing it for you. Sectors, tons of trade ideas. You're going to get more trade ideas you know what to do with. There's always one here to start your week. You're going to get the 5 DTCs. You're going to get more on the daily trading. You'll never have to worry about there being enough trade ideas. Bitcoin. We said, hey, if Bitcoin breaks that 92 again, it's probably falling down to that blue trend line of support. Well, guess what it's been doing? And I don't know. I think it finally got there yesterday, maybe breaking it. I'll look again today. But those of you trading the Bitcoin, right? So there's the newsletter for you. It's posted every Monday morning. These are the recordings. There's your chart school every Monday morning. Boot camp. This is where the recordings are put. When you become a member, you will get an email with the links to these calls, and they're also right here, just on the calendar. So if you miss the email, you just have to click it. Pretty easy, right? And then the recordings are put here if you have to replay it later. There's your Wednesday midweek, and just a little bit of everything. Hey, here's where we are. Here's what we're doing, and then that market rundown recording. The DTCs are posted here, right? So there they are. Every day you're getting a trade idea, right? And you can see up here, that's the bat phone I was referring to. You see that number 3? Those are my students that are waiting to hear back from me as soon as I hang up this call. Okay, my notifications letting me know that, hey, if you ever need me, I'm there. All right. All right. So, any questions? I'm going to go ahead and get that out of here. Greg, you are a member, right? I think you've been a member for a while, I think, since last year. If I remember. So, any other questions? I think I've been trying to tackle them as I've went to make it easier. I'm more than happy to answer anything you have. As I said, if you want to just get on the phone with Josh and talk about it. Hey, what's it cost? Obviously, got some other questions. Josh will walk you right through it. There's his email. You're gonna get Josh to post that again for you there, and or actually, I can do it. I've got hands. I think he's faster though than I am. I've texted with him. I think he's faster. There you go. We're gonna shoot him an email. Say, hey, I'd like to set up a call. Talk a little bit about this LTS. As I said, it's part done with you, a lot done for you. But I'm here whenever you need. Oh, the now, yeah, Mario, absolutely, man. Let's do that. Okay. Thanks for reminding me. Here we go. Funny thing is, it looks like you're yelling at me now with your analysis. All right, here we go. All right. So remember the rise and fall with the market idea. Okay. So our decisions are not usually made based on an individual stock by itself. Okay. So we're looking at thinking, hey, okay, notice how the S&P got to a level here as of yesterday. This level has been here since I first drew it. Okay, just like Friday's bounce. This level's been here since I first drew it. Resistance, resistance again, popped above it, support, 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 and up we go. Okay, break through this little flag thing, new highs, right? None of this was really a surprise to us. We got that little bounce, but then we broke yesterday, hit that level and got a little bounce. We are exceptionally oversold, which isn't necessarily a signal. Again, it's more of a condition, an environment. Okay. Sure seems like the pressure valve could, use a release of some kind. So let's put the SV back up here, right? And so we're kind of watching, see a little bit of a turnaround. Maybe we are going to. We thought, as we opened today, that there was just we didn't really see any good price action like that. We just thought, look, between where we are here, the bounce here, and volume was exceptionally high yesterday. As a matter of fact, it was the 4th highest in about the last 18 months. The 3 higher ones all marked a low. Okay. So we thought, might be going higher, you know. So that's part one. We decided now was trading above this old level here, okay, which is basically around 815. At that time, remember, it was up here on 8.25. So this is a stock in the last 3 days has fallen from 900, so above 900, more like 920, all the way down, as you can see, to this low. Get that out of the way. Okay, and this, look where it found support, right at that old level that I had drawn. Again, we drew this way back here just in case it ever shows up again. And sure enough, it's where we end up trying to hold up. Right. So we hit around 780. This thing fell, right, from here. And in 3 days, $140 later, we're here. So if we're at 8.25 and we are going to get a rally up $40 at that point, isn't it reasonable to think we could get close to 900? But also, no one actually said we need to go to 900, or if we do, right? We just need the thing to rally, right? So for example, if I owned the 900s and this thing shot up $30 right now, or in the next couple hours or whatever, we would go from $1 to 250. Okay. So we don't need to get to 900, but yes, that's what we think we would get to in a scenario where we rallied. Okay. Now you may have seen later when we pushed lower, we use that. This is common, something we do. When we pushed lower, and by the way, notice how I didn't need any Greeks or scanners or any kind of crazy stuff. It wasn't too hard for me to figure out, hey, if we rally $30 in the next hour, what's my buck here? Or it's pretty thin, but what's my buck-ish going to be trading at? Somewhere around 250. Pretty easy stuff. And that's something I teach everybody. I mean, it's something we talk about every single call when we're looking at the options chain, right? So when the stock dropped, again, this is the second part. I said that's part one. Part two is this market has not been able to hold a rally for anything, but it has put on some pretty big rallies. So, first off, we added those SPY puts as a hedge, which I mean, we should have been up. I'm pretty sure we were up well over 100% on them. We'd elected at that time to say, nope, we'll go ahead and wait for the bigger move. Because if we're not going to get paid on those, that probably means now is looking pretty good. Okay. So keep in mind, now was our calls. SPY going into tomorrow were our puts, protecting us in case now dropped. So when now dropped and it lost half its value, our SPY puts were up 100%. Okay. So we weren't down at all. We're actually up. But we also, knowing that we have a full 4 days in these trades, long time between now and Friday at 4, we use that drop as an opportunity to roll these 900s down to the 880s. You can see they're still trading at $1. That's how much we paid. So we use the decline to get a cheap roll. So think of it as we bought $20 worth of strike or potential intrinsic value. If the stock made it to 900, we bought $20 worth for $1, right? And because of that, we're in a better position if, right, we're leaving it open for what is this market planning on doing here? Okay. On one hand, certainly keeps dropping. Every time it looks like it's going to rally, drops further. Cool. That's why we have this. Okay. And I know we were up well over 100% a little while ago. We've obviously rallied now. This market wants to roll back over and fall off a cliff and take out the low. Fine. That's what these are for. We grab 200%. We're up no matter what happens with now. Flip side of that is if we are going to rally, right, go into the green, maybe go back up to this high. Cool. That's what now is for. And remember, we don't need it to get to 900. If we do, that's great. If we love the rally and we're buying into it, we think it's great. But keep in mind, if this thing only went to 850, right? So here's our 880s. If this thing just rallied to 850, went up $40 between now and let's say tomorrow morning, market likes the CPI, right? Well, we're going to be trading at $7 or $8. Okay. We will be up 200% on the original trade just being at 850, and we can close it if we want. All right. So we don't have to get there. All right. So there's a lot. Remember, I teach the idea of think of the time value component here, the extrinsic for those of you, right? Think of that component as somewhat of a peak or a bell curve, like a peak mountain. Okay. These prices, the time component is moving with the stock. So if the stock moves closer to our strike, I don't need to go into the money. The time component is moving up for me. So if we only made it to 850, as you just saw, we'd be closing out. Well, we now have $3 invested in. We'd be closing it out for 7. We'd make 4, which is 200% on the original trade. 850 would be target 1, I would think, if we get a great rally here. But again, if we get a nice snapback, going to 9 or even 950 is not the craziest thing in the world. Again, 140 to 150 top to bottom just in these days. All we're saying is, hey, can I have half of that? Right? So does that answer that for you? So it is based on the hope of a short-term bounce of so we're taking a deeper dive here, and remember, on LTS, this is all covered for you. There's strategy videos, there's everything, right? So this will all be covered. The way I encourage my students to think about what we do is more of like a chess match. Okay, I'm not hoping or anything about now. What I'm thinking to myself is, hey, if the market rallies, which we thought there was a significant chance of, right? And look what's happening over here. Now, we hit a new low first. We thought there was a decent shot at a rally. Now is not special. So circle back to what we said earlier. We could have picked just about anything, and it's probably looking better. It'll probably be looking better if the market rallied and went into the green today and then some. Is it in the green? No, not yet. So if it rallies and goes into the green, okay, just about everything, not everything, but most things will rally, some to a greater extent than the other. Now is just the one, it has been very volatile, like some of these bigger ticket names. So we can go further out, way up at 900. And if that moves higher and the market takes it with it, but we could have picked any number. We looked at 3 or 4 different stocks this morning. And I thought, you know what? The risk reward was better on now if we were right. Because we saw an opportunity. Again, look at the money over here. Now's at the money is right around $18. So if by chance we rallied into the end of the day today, and I don't know, let's say we were at 830 by the end of the day, somewhere close to the high. And then let's say tomorrow the market decides to follow through for once and CPI juices it or something. And this thing opens up and runs to 880. Our strike, the one that we currently have. Our calls would now be trading around, we'd lose a little bit overnight or whatever, but around $18, 16 to 18 bucks, call it 17, which means we'll have a net of 14 points, which is a 700% gain. If the market wants to flip around and fall again like it keeps doing, no problem. That's what the SPY was for. It's a hedge. We don't care if we get wiped out because in theory, we're crushing it on now. Okay, so this is that chess match of thinking about all the different pieces on the board. I'm thinking about time, okay, because our decisions will change as every day goes by, right? Because the variables are changing. We have one day less time. The market will probably have done something different or added a piece of the puzzle for us. I'm thinking about all of our trades, right? So now and SPY are a unit. They're not independent of each other. We didn't think one was going down, one was going up. If now is getting crushed, it's because, it's probably because the market is getting crushed. So that's why we bought the SPY to protect it. Then it's a matter of risk reward. Where do we think to get the best reward if you do this, that, or the other? Why do we roll when we roll? I brought those calls down after we sold off because they're cheaper. I don't want to spend $4 on that roll. I want to spend $1 on that roll. Now, if you want to take all week and get to 900, we're closing it out for 20 bucks. Previously, if we were still at 900, we only get whatever time values left, which is probably still enough to be profitable. But now We don't have to worry about the time value. If we get to 900 at all this week, we're closing out for 20 bucks, 700% gain. Or no, I guess it's more than that. 15 to 850%. No way, 750%, something like that. Do that math right? No, eight. Yeah, 850%. That's right. Does that make sense? A lot of times, what we're doing, I'm not saying we're not like going long, we think higher and things like that, but a lot of it has nothing to do with up or down, okay? As much as trying to catch the wind. So right now, notice how it really has nothing to do with up or down. We're trying to take advantage of a volatile market. Hey, if snapback rally to be violent, cool. Be as violent as you want because we have now, and now we have the 800, 880s. If you want to completely reverse yet another rally, great. Fall as far as you want. We have the SPY puts. Now, in a perfect world, we prefer the rally. Obviously, we can make a lot more. All right. All right. Good deal. So I will let everybody run. As I said, we tend to bring in two, maybe three, members just to make sure because I do handle everything. So I'm answering all the questions when my members need me. If they need to hop on a call, I'm doing that. You're never pawned off anybody. There are no assistants. Okay. So worth a conversation. Like I said, if you want to start making money, that's what we do. Velocity Traders track record is there, transparent. Every trade is documented. We're making money. If you want to make money with us, absolutely love to have you. Have a conversation with Josh, see if it's right for you. Okay. And then, of course, we'll be teaching you, of course, how to do the things on your own too. But we'll get you making money right out of the gate as well. Right. Otherwise, I'm going to let everybody run. Once again, I appreciate everybody taking the time. And yeah, see you on the other side. Good luck in the trade.